Hey everybody, welcome. It's Tradiest Trades here, and today I'm going to share something that's really important to me to share with you because I see so many educators in the trading space not emphasizing to their students the importance of trend, how to identify trend, the fundamentals of why trend is so important to align yourself with. The trend is the basis of all profits. You're going to learn here today why the trend is so integral for you to incorporate into your trades to become a better trader. And it's the key to high probability trades. That's why I've got a picture of the key here. It's a pretty fancy looking key. It's not a fancy subject or topic or something fancy or hard to understand, but if you can incorporate it into your trading, you are going to have higher probability trades. So before we get into it, just a disclaimer, this is risky business, everybody. Trading is dangerous. You can lose money in these markets. This stuff that you're learning here is educational. It's here to help you learn, but is not to be used, or you're not to be holding me responsible for your own decisions in the marketplace. You are a grown adult that is capable of making their own decisions and therefore living with them and not blaming someone else for them. So let's get into it. Let's start with what is trend. I think it always helps to start with a basic definition of what a trend or what anything is. If you're trying to learn something, what's the definition of it? So what is the trend? The trend is the general direction in which a market is moving over a period of time. You have different kinds of trends. You have bullish uptrends where there's higher highs and higher lows and indicates a strong bullish sentiment. There's downtrends or a bearish trend where price makes lower highs and lower lows and indicates a bearish or negative sentiment. Then you have range bound trends. I wouldn't even call that a trend. I would just call that range bound. So the trends that we're going to talk about are bullish and bearish trends. So there's a definition. It just helps to frame your mind as what is a trend? Well, price is either going up consistently or it's either going down consistently. So why is the trend so important? So this picture here is a picture of Sir Isaac Newton. He's a famous physicist that came up with the Newton's laws of motion. And he had the first law of motion, which was also known as the law of inertia. And when he created this stuff, he probably wasn't thinking about traders and markets and prices of different things going up and down and people speculating on it. But his concepts still hold a very heavy degree of importance to us as speculators, and here's why. So Newton's first law of motion, also known as the law of inertia, states that an object at rest stays at rest and an object in motion stays in motion with the same speed and in the same direction unless acted upon by an unbalanced force. So why is that so important to us as speculators? Well, what it means to us is once the market starts going up and we're in an established uptrend, that market's likely to stay moving in that direction in the same speed and in the same force until something comes in to send it the other way. And on the flip side, for bearish trends, once a trend is going down, the market is likely to just keep going down based on this law of motion. So we can take that into account and think to ourselves, once we see a trend, it's established, we should expect it to continue until it isn't. And therefore, with that assumption in mind, we can align ourselves with the trend because we anticipate that it's going to keep moving till there's some force that acts upon it to send it in the other direction. So I've got the 3 golden rules of trading here. So the first one, and this is a classic quote by none other than the legend Larry Williams, whom I give credit to for a lot of the stuff that I know in these markets that helps me speculate successfully. But the first thing is that you need to remember when you're thinking about trends is that the trend is a basis of all profits. So think about that for a second. In order for you to make money in this market, you need a trend of some point. You need price to move from point A to point B, and that's a little trend. Whether it's a big trend or a little trend, it's still a trend. Price moving in some direction that you speculate and anticipate that it's going to go there. So it's a key thing to keep in mind that you can't make money without a trend. So basically, that's what I've written here. Without a large trend move in the marketplace, you cannot profit. And trend is relative also to whatever time frame you're trading. So I personally enter on the daily time frame. That's the lowest time frame that I'll go. So I'm trading daily and weekly and monthly trends. Somebody might be day trading and they're using a 15-minute trend or even lower than that, which I think is pretty crazy. But if that's what someone's into, they can go ahead and do that. But the key is that there's trends on every time frame. So a trend is relative to whatever time frame you're trading on. And then the third key of this first point is that the highest probability trades are in alignment with the existing trend. So if you follow my channel, you know that I trade commitment to traders style strategy, which picks tops and bottoms. So that is not with trend trading, But how I succeed in that is that I know how to identify when the trend has changed in the direction that I'm anticipating it's going to go in based on the COT. So basically, once the trend has changed and I know there's fundamentals underlying the market that suggest it should move in a certain direction, I am really in alignment. I've got everything going for me, fundamentals, and now the power of the trend in my favor. But just keep in mind that the highest probability trades are in alignment with the existing trend. Now, rule number 2 is buy signals work best in an uptrend. And that might sound way too basic or simple or stupid to some people because it's just almost so obvious. But you'll see people all the time taking buy signals in a downtrend and they fail. And you see people taking sell signals in an uptrend and they fail. So buy signals work best in an uptrend and sell signals work best in a downtrend. I'm going to show you some examples of this as we move through the presentation. So just going a bit more into the golden rules of these trends, and basically the first one, the trend is the basis of all profits, from Larry Williams. So if we know that we need the trend in order to profit, we start to reframe our thinking about the markets. So we prioritize understanding what path of least resistance the market is currently on. In other words, which forces are currently dominating, and look for ways to participate in the market via entries in the marketplace in that direction. So the second point is we understand the importance of identifying the trend. So once we start to see how important the trend is, it really reshapes and influences our thinking about how we want to participate in the market. We're no longer desperate for trades because we know what direction in the market we want to work. We know if the trend is up, we only want to take longs. We aren't interested in shorts. So this reframes our mind to really understand the importance of trend. We understand the importance of identifying our time frame. So are we looking to catch weekly, daily trends, or are we intraday trends? So this is largely personality dependent and also time dependent. How much time do you have? I think most people would benefit from just trading the daily time frame based on just entries entered in once a day at the close, and don't worry about intraday or day trading. But that's up to you to decide what works for you, and what doesn't work for me might work perfectly for you. But the thing is, whatever time frame you're on, you need to know what the trend is. It's so important. And the fourth point here, by aligning with the trend regardless of our time frame, we put ourselves into the highest probability trades. Okay, so the golden rules of trends. Here we keep going. So I got the 2 and 3 here on the same slide, and I'm going to show you some examples here. We're going to get into some charts, the stuff that we all love. Our technical trading geeks love charts. So we're going to get to that, okay? So we're going to go into why buy signals work best in an uptrend and sell signals work best in a downtrend. Now, I just put in big cap locks here. Not all buy and sell signals are created equal. So what does that mean? That means, and it's basically what I said earlier, is that in a downtrend, do you think buy signals are going to work really well, or are sell signals going to work really well? Pretty obvious, but it's that the sell signals will work better in a downtrend, and vice versa in an uptrend. Your buy signals are going to work better. They're going to be far more potent. So this is what we're going to go over here right now. So right here, I've got buy signals in an uptrend, and just to give you a bit of context into what you're seeing here, I've got a 50 period moving average, which is the red line. And then that's just showing me what the trend is. Price is above the 50 period moving average and it's sloping up. That tells me the trend is up. That's a very basic way to tell what the trend is. Throw a 50 period moving average on whatever chart, and whatever direction it's sloping is generally the direction of the trend. Down here, I just have a simple 4 period Williams %R. And if you've ever dabbled in oscillators, basically when oscillators get oversold, that's a time to buy. When oscillators get overbought, that's a time to sell. And that's generally speaking, but at least they give you a condition or a time frame to look to buy and sell, and then you can use other entry methods to get in. But what I've marked with the green vertical lines is just showing we're in an uptrend any time that this oscillator got oversold. So I want you to look at this. Would this have been decent times to have got long? The answer is pretty obvious. The answer is yes. We are in alignment with the trend. Upsloping moving average, oversold %R readings presented excellent times to go long this market. So now we're going to look at the opposite. We're going to look at buy signals in a downtrend. So again, just a little context. Red moving average, 50 period moving average, down sloped tells us the trend is down. So now what I'm marking off with the vertical lines are buy signals, in other words, oversold percent R readings in a downtrend. And take a look at this. How well did any of these work out? Well, this one worked out okay, but before that, there was 5 horrible trade setups. And this one worked out okay. This one, not so good at all. This one, okay, kind of depending on where your target was. And then finally, this one here caught a trend change, and then the trend started sloping up. So what do you notice about this? It's just simple. If you're taking trend aligned trades, they're far better, they're at higher probability. Let's take a look at it on the sell side. Now we got the same price action, there's the same area of price on the Bitcoin chart, and this is just now looking for sells instead. So we got a downsloping 50 period moving average, and we're overbought readings on the percent R, the 4 period percent R. And not all of them are perfect, but for the most part, each of these provided excellent sells. These two weren't so good. This one wasn't the greatest, but the rest of them more or less got you in prior to very large moves in sync with the dominant forces at work in the market. You are working the side of the market that is the least path of resistance, okay? So let's keep going. Now we've got sell signals in an uptrend. This is the same price action on Bitcoin where I showed you the buy signals in an uptrend. Now we're looking at sell signals in an uptrend. 50 period moving average sloping up, and then we got the buy signals, or the sell signals, overbought areas on the percent R. And overall, horrible time to try to sell. Okay, so that's what I mean by all sell signals are not created equal. You really need to take into account the trend. Okay, so how to define the trend? So there's so many ways and so many technical methods for defining trends. You got moving averages, market structure, MACD, RSI, Bollinger Bands, ADX, trend lines. Take your pick. There's so many different methods of determining the trend. But what matters is that you are consistent. So you find a tool that you like, that works for you, that you understand, that helps you determine what the trend is, and you stick with it. You don't throw a bunch of indicators on the chart that are telling you the same thing. Use one tool to do this job. You don't need a bunch of different tools to do this job. And this is a classic quote from Larry Williams: dance with a girl you went to the dance with. Don't flip around, don't change it up, just stick with the tool that you choose. So my favorite method for determining the trend. Let's look at it. Let's learn it. It's an amazing tool. You're going to really like it. It's called the 18-bar path of righteousness. And credit is always given where credit is due on my channel. And the 18 period moving average path of righteousness was invented by the legendary Larry Williams. There's a picture of him. So he came up with this concept. I've learned it from him, and it's incredibly powerful. It's a slower moving trend determination tool. It's not going to determine the trend as early as some other things like a Donchian channel might, or a trend line, or other sorts of things that tell you the trend has changed. But since it is so slow, once it has happened, you can have a bit more confidence that the trend is probably pretty strong in whatever direction that it signals. So let's go over the rules. So for a bullish trend, here is what we're going to review first. So a bullish trend, you need 2 consecutive bars where the lows are above or greater than the 18-bar moving average of prices. Neither of these can be an inside bar. That's a very important thing to think about. Also not written here, but once price trades back into the moving average, you have to restart your count. But after you get these 2 consecutive bars above the moving average, then you need to see follow through, which is where price trades above the highest high of the 2 bars. Okay, so let's take a look at some examples. So here we've got the 18-bar moving average, which is the blue line. So I've marked off here, we've had 2 full range bars where the lows are higher than 18 period moving average. None of them are inside bars. Then I marked off with a green line here, follow through. So this it created the follow through, which tells us, okay, now the trend is up. We can look to take buy signals in this market. That could be oversold buy signals. So then we come over here, price went below the 18 period moving average. This bar was not an inside bar, and neither was this one. So we had 2 bars below the 18 MA, and it actually traded back up into the MA. So I marked off not a follow through here, but actually this count would have been reset here. So there would have been no trend change here. It would have been looking for continuation longs. So let's keep looking here. So next thing here, we have 2 bars above the 18 MA, 1, 2. They're not inside bars. We trade to the high of that bar, and we have our trend is up now. So then price comes down. We see 2 bars below the 18 MA, but what do we notice here? There's no follow through. So as soon as we traded to the high of that bar, it's like, oh, the trend is still up. We should look for buy signals in this market. This market is still bullish. And look at this trend. Basically, this puts you in alignment with strong trends. Now, this is a recent chart of Euro. Mind you, this chart was fundamentally set up for a bullish move based off of COT and other fundamental indicators, which you can learn a lot of on my channel. And I was sharing these setups with people in my Discord. Earlier, for the last month or so, prior to that, it was more in February that we were looking for these longs. But these big moves come from understanding the fundamentals. But that being said, even if it's just simple trend following and price action that you apply to your methods or to your trading, this method is going to keep you in some really nice moves. Okay, so let's take a look at the bearish trend using the same idea. So it says bullish trend here. It should be bearish. That's an error on my part. Sorry about that. But 2 consecutive bars where the highs are below or less than the 18 bar moving average of prices. Neither of these can be an inside bar. Then we need to see follow through where price trades below the lowest low of these 2 bars. So let's take a look at some examples. So here we have Euro back in October 2024, and we had the 18 period moving average on our chart here, and we had 2 bars trade below, none of which were inside bars, and then we followed through by trading through the low of those 2 bars. This tells us the trend is down, okay? So then what do we see? Price traded up above the 18 period moving average, 2 bars above, none of which were inside bars. You can't really see on this chart, but this bar did not follow through and go above the high of this bar. So what that tells us is there's no follow through, no trend change. The trend is still bearish. We should still look to work the sell side of this market. And we didn't get a trend change to the bullish side until way over here, 2 bars above. And this is the example I just showed you previously on the previous slide. So let's take a look at another example. Here's the S&P 500 E-minis. So here's the 18 period moving average, 2 full range bars below the 18 MA, none of which are inside bars. Follow through, our trend is now bearish. We come down, we get 2 full range bars above, none of which are inside bars, but no follow through. Trend is still bearish. We want to work the sell side of this market. Now recently, this is recent price action here, we have had a bullish trend change on the S&Ps and on the indices in general. So that's how you can use this to just know what is the trend. Once you know what the trend is, you know you shouldn't be taking buy signals. You should be looking to take sell signals. So basically, any time frame and any market. So what I've just showed you, all those charts were on a daily chart, but I'm going to show you some examples on the 15-minute and the weekly charts. Here is Solana USDT. So this is a crypto, and this is on the 15-minute chart. So basically, it works on whatever type of markets, whether it's cryptos, treasuries, indices, currencies, whatever, energies, all these different markets, stocks, it works. So here you go. So we had 2 full range bars above the 18 MA. Remember, inside bars don't count. So this is our first bar count. This is our second bar count. Here we have follow through above the highest high of those 2 bars. The trend is now up. We can look to buy oversold pullbacks. Each one of these little pullbacks would have been oversold on the percent or other tool that measures overbought, oversold. So then it wasn't until way up here that we got 2 bars below the 18 MA, none of which are inside bars, and then we have follow through. The trend is now down, and we want to look to work the sell side of the market. So that's crypto on the 15-minute chart. Here's Microsoft, a stock on the weekly chart. So here we have the 18 MA and 2 bars above. Now we didn't follow through, we traded down into the 18 MA, and I made a note here that the 2 bar count is reset if price trades back into the 18 MA. So here we had 1 full range, but it was an inside bar. So here's our first full range bar that's not an inside bar, and then we had 2 here, and then we had the follow through. So now the trend is up. Now down here we had 2 full range bars trade below, but did we follow through before trading up here? No, trend is still up. Look to take the oversold buy signals in this market. Here we had 2 bars below the 18 MA, but no follow through before we traded back up into the 18 MA. So the trend is still up at this point. And then here we finally see Microsoft gives a weekly 18 MA bearish trend change. Trend is down. We want to look to work the sell side of this market. So what are you guys going to do with this information? I've given you some pretty potent stuff here, a really good tool, and also some good fundamental knowledge about why the trend is so important. So this is a quote from former US President Ronald Reagan: trust but verify. Trust what I have to say here because I'm not misleading you, but you should verify it yourself and go into your own charts and see, is the trend really that important to understand? Should I really pay attention to this stuff? Is Tradius just stringing me a bunch of crap that doesn't matter, or does it really matter? Can it impact my trading in a positive way? The only way for you to believe in it is for you to go to your charts and study it and see and apply these concepts and see, am I full of it, or am I giving you a little gold nugget here? So test out the 18MA method. Does it work for you? Or maybe there's another method of trend identification you prefer. Maybe you like a 12 Donchian channel. Maybe you like a Bollinger Band. Maybe you like, I don't know, there's lots of tools. Maybe you prefer market structure, just using simple short-term swing points in the marketplace. Whatever it is that you prefer to determine the trend in your price analysis, stick with it, pick one that works for you, and just apply that consistently in your analysis. It doesn't have to be the one that I liked. You don't need to like what I like. You just need to find what you like and be consistent with it. Basically, I've shown you my favorite here, but it doesn't need to be yours, okay? So what's next? I've shown you guys why the trend is so important, and I've shown you my favorite way to determine the trend. So what comes after knowing what the trend is and knowing why it's so important? Well, buy signals and sell signals. So now you know the importance of knowing the trend, and having learned a great method for finding the dominant trend, the next step is to find ways to participate in a trend move, which is entries and exits. But in show business, there's a great saying, always leave them wanting more. So I've given you guys a lot of good stuff here today, and I think I've added a lot of value to your trading. I have a free Discord that you can join if you'd like to learn more about trading with the trend or COT, or to just generally see how I work in these markets. You can follow along with me in live market conditions in my free Discord. Just shoot me an email to tradiustrades@gmail.com and I'll get you your private link. And if you guys would like to learn more about entries, if you'd like me to share more content on my entry methods, make sure you comment and like. Just leave a comment. I'd like to see more entry videos. Leave me some feedback, what you guys thought about this video, what you'd like to see next. And like, subscribe, share, all that good stuff. If you liked it, I really would appreciate the support. And if you're on X, formerly known as Twitter, you can find me at Tradius_trades. I really hope you guys understand how important the trend is after watching this. I hope this has made some sort of positive impact on your trading. And thank you guys, and I'll see you next time.